There are very few people in the world who can swim against a strong current in an ocean and live to tell us about it. Likewise, in day trading, there are very few people who can trade against the market and still have their personal or prop firm trading account the next day. Counter trend trading is the destroyer of dreams. Oftentimes, traders who are struggling are in the struggle because they just don't realize they are counter trend trading. And the craziest part of all this is that it is so much easier to flow with the market instead of trying to fight against it. Just like when people are trying to, it's much easier to swim with a strong current rather than to be trying to swim against it. We share valuable tips like this in our free guide. So if you've been blowing funded accounts trying to pass your prop firm challenge, there could be something in this free guide that could be the key to get you over the hump. So comment below, give me the guide, and I'll send that right over to you. In this video, I'm going to show you the counter trend trap. I'm also going to show you how to flow with the market so you can finally pass your ES Futures Prop Firm Challenge. Let's go deeper. All right, guys, let's jump right in. So for this one, I need to set up a scenario. All right, so here's the scenario. You've analyzed the chart. You decided to go long, but you missed your entry. All right. Now you remember from your own analysis, you wanted to go long, but for whatever reason, you missed the entry. You went to the bathroom, the kids was calling your name, you got a call from work, something happened, right? You missed your entry. So now we're going to come back and see what a lot of people do when they read the market right, but then because they missed the entry, because something weird happened, then they flip up and end up counter trend trading. Let's take a look at how that happens. So here we go. We saw this, let's say we figured this was a range, right? And then bam, we broke out right here. But we missed the breakout, right? We missed the breakout, we didn't get to go. And so in most cases, you should still be thinking long because that's what your analysis was, right? But for some reason, I don't know why the mind works like this. Many times, if you miss that first run, not even the first run, if you just miss your entry, so you missed your entry right here, man, for whatever reason, you start to think that the trend ain't gonna run like this now. You know, when it hadn't even started, you were like, yeah, I'm gonna catch me a nice run. But then when you miss your entry, for some reason, you start to think like, oh, this one ain't gonna go as far. So what you start to do for whatever reason is just people love to counter trend trade. So you missed your entry and then you see, bam, this. For whatever reason, when this little falling hammer right here develops, for some reason, you're not thinking about going long anymore. Now you're saying, I've missed this run. We've ran too far. I'm gonna catch it coming back, right? And so you go right here on this little hammer. Let's mark it up. You go right here on this little hammer, and that is very short-lived. You get up what? A half of a point maybe, and then bang, this boy right here gets you. That's short-lived, right? You would think right now you would go back to your original analysis and say, why did I just go short, right? I'm supposed to be, my analysis was to go long. Why did I just go short? You would think you would flip the switch right there, but it's something about counter trend trading. I don't know what it is. I think after a trend runs so long, you think that the bigger possibility is to reverse now and go the other way, but many times it's not. All right, so then guess what? You could have stopped there, but now you got in your head to catch it coming back. So what you do is you wait for another little red candle right here and you try it again. Man, you just try it again. Now this time, hey, we caught it, right? You might be up 5 points. You better take some profit, because if you don't, look, bang, got you again, right? Got you again. And I'm being generous. A lot of people would have started counter trend trading back here on this boy right here. Possibly, but we'll take that one off. We'll take that one off. But boom, we got you again. So guess what? You would think that you would say, all right, maybe I need to stick with it. But guess what? When you see this little red candle right here, many traders are gonna be like, all right, we gotta be turning now. We gotta be turning. We've trended up. We gotta turn here. You go right there. What happens? You might get up 2 points and then bang, hit you in the head again. You would think you would stop counter trend trading. But no, somebody's gonna go right here. And here's the sad part. The person who goes right here, they're gonna get up about 2 points, maybe 3, and then bang, hit them again. But the sad part here is they went right before it finally did make a decent drop. That's the sad part. But hey, for the person who did go right here, guess what? You go right here, but you can't take no profit because you lost here, you lost here, you lost here, you lost here. So now you got to try to get your money back. You can't lock in, you can't do nothing. You hoping this thing comes back down here, right? Wrong. If you don't lock in, if you don't take profit, guess what? Bam, bam, it gets you right there too. Counter trend trading is the destroyer of dreams. Now, let's go back. You missed the entry here. You missed the entry here. You know, all you had to do to turn this into a winning day, all you had to do was wait for a touch of the trusted best friend 21 EMA. All you had to do was wait for a touch of the 21 EMA. This is where patience comes in trading. This is where discipline comes in trading. Once you missed your trade, all you had to do was wait for another entry. It came right here. And this is basically a push down first entry, push down second entry long right off the 21 EMA. You go here and you catch all of this. And you don't have to take this loss. 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 You don't have to take this loss, all right? These type of trades here, this is the trap because you was counter trend trading. Counter trend trading is a trap, all right? You're fighting against the market. The market is clearly running up, but you're steady fighting against it, trying to go short, swimming against the trend. And all you had to do was take this one entry with trend, with your initial analysis back here, and you would have been good that whole time. And that's the crazy part about counter trend trading. That's the crazy part about not going with the flow. But let me explain something to you because you may not understand. Listen, people, the 21 EMA tells you everything you need to know. All right. So this is how you stay in the flow. All right. So this is how you stay in the flow and you don't get caught counter trend trading. The 21 EMA is your best friend. Put it on any chart, any time frame, ticks charts, minute charts, volume charts. I don't care. The 21 EMA is where it's at. It's the only indicator I'll put my stamp on. All right. This 21 EMA. The rules are simple. If you're above the 21 EMA, you're more than likely in an uptrend. If prices are under the EMA, you're more than likely in a downtrend. If it looks like a roller coaster, you're in a range. The rules for the 21 EMA are so simple. And if you follow them, it'll keep you from fighting against the market and instead put you in the flow, which is where the money is truly made at. So let's look at the power of following this 21 EMA. Let's just follow it up on this day, all right? So again, don't counter trend trade. The EMA prices are above this 21 EMA. We're cleared in uptrend. So we had a beautiful trend up. I'll consider this a trend break and then another 2 legs up. So this market cycle could very well possibly be over, but I will follow that 21 EMA. Then we get back under here, right? We're under the 21 EMA. We try to go higher once, twice, couldn't do it. I'm definitely thinking we're holding here. And if you count this from the bottom, this is really nothing but it's choppy, but it's a push up, first entry push up, second entry short with a beautiful oh man, look at that candle. I just want to mark it because it's beautiful. Bam. You go right there because we're under the 21 EMA. So we may make a short run down, and it was more than a short run. We dropped, trend down, trend break, retest a new low. And let me say this too for people who are new to the channel. We follow a very simple market cycle. I mean, it's so simple. I can draw it right here for you, and it'll be easy to see. The market cycle is trend up, trend break, retest a new high, which you saw back here. Trend up, trend break, retest a new high. Coming short, it is trend down, trend break, retest a new low. Coming short, it's trend down, trend break, retest a new low. All right. Then if we look at it from a big scale, this is a big trend down. This is a nice break, and bam, retest a new low. I mean, it happens all the time. all the time. All right, so that's what we'll be looking for here. So yeah, we get this push down. Awesome. This was the trend break, so I will be looking for a retest. You can go off this high, push down. You can go right here, really, this lower high. That's a great entry. Bam. If you don't go there, another this is a great entry. I'll consider this like a wifey trade, red, green, red, under the 21 EMA. You can go there. Then if you take this pullback right here, this one might be a little scary to take because this is the first entry. You might not take that one. And then you come down here, you got a bottom, push up, first entry, barely by a hair. This boy broke lower, but that's the first entry. Push up, first entry, push up. Now I like this second entry short because it's very small signal candle. Oops. It's a very small signal candle. And we're still expecting another leg. So also legs happen with this. So if I was trading this is leg one. This is the break. So I'm expecting prices to get here. And by golly, Miss Molly, it did. So going here, yeah, my target is down here. And we would have been entering this boy at let's say we entered here at 56.91. My target would have been 56.65. Whew, what a win that would have been, right? Those the good ones there. So we would have just kept on trucking down. Let me see. Let me turn my crosshair back off. All right, and then from this point, every touch off the 21 EMA, because your best entries are on, off, or around the 21 EMA. I mean, here is awesome. I mean, this thing just kept giving you entries. Right? But by this time down here, now I've got those two legs down. All right, so I'm thinking reversal. And this one, well, I would have waited till we got back above the 21 EMA, and I actually would have took this low right here. This was the low. We pushed up, got above the 21 EMA. This is a higher low. It's also my wifey trade, green, red, green setup. I would have went right here. My stop. Now, if you put your stop on this signal candle, you get got. And that right here. So that's just unfortunate. This one might not have rolled. It all depends on where you put your stop. You put it under the signal candle, you get got. I probably would have put it here just to get under the 21 EMA, but that's maybe not, right? So you may get stopped out of this trade. But if you re-enter right here off of this huge rejection, I go again right here. I would go again right here. And that time I definitely would put my stop under this candle because I could tell this is a swing right here. So this is where I put my stop. Now you put your stop there, bam, you catch all this, right? And that's just a nice quick win, but then it takes it right back quick. Boom. Look at the cycle though. Trend down, trend break, retest a new low. It's everywhere. Market moves in twos. Trend down, trend break, retest a new low, right? Market moves in twos. Now, let's just keep following the price action. So once that happens, we got a total new low in place. It's definitely time to think about going long. Right, and it happens right here. I mean, it might have took off and left you if you didn't box up this range. Look, the EMA was straight across. You box up this range right here. You wait for the breakout. You really didn't get a pullback. That's unfortunate. So you might not take this. But if you wait for the first touch of the 21 EMA, like we discussed earlier in this video, and you go right here, bang, you are off to the races. Now, what do we have here? We have a trend up. Here's the trend break. Here's the retest to new high. So I already know that this market cycle right here is more than likely over, right? So if we just keep reading the price action, knowing that market cycle is over, once we start to range right through here, you can box up this range and expect to break out the bottom, because we've already had a trend up, trend break, retest a new high. So we should run into a little range here before the new downtrend starts. If it's gonna start, it may break out the top and the trend could continue. We just wait. When we get a range, we don't care what happens. We just waiting to see. But in this case, that range would have broke a little higher. Range would have broke a little higher. So you might have got caught here on the breakout. You might have got a few points though. If you take this breakout pullback right here, you might have snagged a few points. But once it rejects and comes back in this range strong, you already know what's happening. You want to be looking back to take some shorts now. Look at the downtrend, trend down, trend break, all right? Retest to new low. That's what's happening. So as you can see, let me draw it for you. We're under the EMA. This is a trend down. Here's a clear trend break. So at this point, I will be expecting a retest to new lows. And so what you're looking for is just a nice trade off of this 21 EMA. You want to start from low. We need something like a push up, first entry push up. We need a second entry short or something, right? Off of that level, and bang, we would expect it to keep trucking down. So here we are, trying to retest, right? So I'm actually in this trade. Let me flip over so we can see what's really going on here. It's doing what I expected earlier. And we are up, we're up 6 points. And it's retested, but look at this high, push down, lower high. And bam, off to the races. Where is let me lock in. Oh yeah, I have my initial stop above the last high. So anyway, we should be pushing down, and I'm just gonna set the target right here. I don't know why all my stuff is messed up. Where is my target? Oh, here it is. We should at least come here. If I had more time. But what you really want to do in this situation is, again, get that measured leg going. So I mean, we could potentially, and we're not gonna be able to get all of this today, but this is what's possible, truly, down here. All right, that's what's really possible. Now that prices is well under the 21 EMA, we know we're heading down. Now, I love to be able to lock in, and I'm well above the 21 EMA, because if prices come back, I expect the 21 EMA to hold it for me and continue this downtrend. So at this point, I'm out of risk on the trade, right? I got a target down here. If we make it, it would be awesome. You know, but at 2 contracts in the ES futures market, I mean, I'm looking at $700 right now. I mean, hey, most people, you know, if you make $100 a day at your job, you may be happy with that. That might do it for you, right? So I ain't been in this trade that long, but to be able to make $700 in one trade, it's awesome. It's awesome, man. That's. I mean, I'm not doing it big, saying $700. I mean, there's people making $7,000 in one trade, easy. So we'll see what happens. This is an unfortunate push up, but look how we stopped right at the EMA. All right, EMA, hold us down, EMA. Take these off. Again, this is our target. This would be my first target right here. I might put a horizontal line there. Let's see. And some people be ready to go long right here. That would be a trap. Prices have been under the 21 EMA. So you still want to be thinking short. I know it's above the 21 EMA right now. I know you've gotten 1, 2, 3 nice little greens, right? Now it's making this wifey trade. But what's the overall context? The overall context is we're in a downtrend. We've had a huge leg down. We've had, look at this, by the way. Let me draw this real quick. Trend up, trend break, retest a new high. This market cycle should be over. All right, so we would be expecting, man, another leg down. Let's see. We just gotta see if we're gonna get it. I'm gonna pause and come back and see what happens. So the EMA held. So guess what? This was actually a great place to add on.
Order submitted. Order filled.
We're in. Here we go. Now that I added on, Don't need to make as much. Well, let me rephrase that. I don't need as many points. But let me get out of risk on everything. So I got profit locked in on that first trade I was in, and we're out of risk on that second one. Let's see if we can get this push. We are so close to our target right here now. We need one more push down, and we will be somewhere. Let's see if we can see the money. It's no fun if I send the money, right? Let's see here. Properties. Come on, taking all day. Thank you. Let's go from points to currency, see what we're working with. All right. Push on through. We need one more push, but as we see, the market is doing exactly what we expected. We had a trend down, 2 legs back. We expect a retracement to this low and further. Here we come. You just have to learn how to flow with the market, and a great way to do that is by using the 21 EMA to tell you which direction the market is going in right now. And when you can understand the market cycle, then you can read a price chart like this all day long. Any price chart too. It's not just the ES futures thing. I could do this on gold, NQ, whatever it is. If there's a market, price action is the same. Especially if especially we're talking futures. Just based on the order mechanism, order flow, and all that good stuff. Price action is king. We are what? We don't need 5 points. I mean, we're only 5 points away at this point. Really 3, if I put it where the actual target is at. Because guess what? $1,000 day is it's a good day any day. I love $1,000 days. So as soon as I can lock in this $1,000 day, I'm going to. So I need to be at what, about 57.14. I want to get past 57.14 so I can lock in this. See, here we go. Here we go. One more push. Come on, one more push down. Let me go back. As I was saying though, you know, if you saw these 3 greens up, you know how many people just went so many people just went counter trend right here, got trapped and lost immediately. I mean, that's what caused this little surge right here. This 1, 2, 3 down. That was from people getting trapped who went long all in this little area right here. Stay with the flow. Don't fight the market. This was fighting the market. It's been down, but you see 1 green candle here, 2 green candles here, and it changes your whole outlook on the context of the market. Make sure you stay with the market context. Stay with the market context. All right, let's see that 57. All right, actually, all I need to do is get to 57.15, and I am locked and loaded on my $1,000 day. Come on, push down, push down. I'm gonna wait for this candle to close though before I lock in. I'm also just gonna lock in some profit. Period. Right here. Wait this thing out. Come on, push down. Man, we were so close, y'all. We were so close. 57.15. Push down so I can lock in this 57.15 for my $1,000 day. I hate when they do me like this. Come on, man. We need one baby push. I need you to close on your low. We were so close to being done. I mean, we was at 11.25. We were what, 2 points away? Come on, baby. Here we come. Here we come. This is why you don't make decisions off of 1 candle, you know? Somebody's looking at this hammer up saying, let's go long. They might get trapped. I could have looked at this rejection and said, oh, I better get out, which might be valid too. We gonna see. I think I see some sell pressure coming in. That was a nice little rejection there. I almost turned into a hammer down. I'll take it. I'll take it. We break lower. This is where my next lock in will be at right here. Push down. Look like the cookie finna crumble on us, y'all. Might be a $400 trade. We saw 7. Well, we saw I saw 7. We saw 1,200. I'm tripping. You know, when I saw that 1,200, I should have locked in immediately, probably, because hey, I mean, I had $1,000 day in the bag. You know what I'm saying? Take the money, people. Take the money. You know, if $1,000 was good, when I saw 1,300, I should have been locking in 1,000 then. I wasn't thinking fast enough because I'm shooting this video and trading at the same time, which is why I don't typically do this. Or teaching and trying to trade at the same time, man. Trading requires focus. Try to eliminate as many distractions as possible when I'm trading. But we might get another shot here. EMA held again. Your best entries are on, off, or around the 21 EMA. It held again. So just look, you go here off the 21 EMA, you go here off 21 EMA, you win. You go here off the 21 EMA, you win. You go here off the 21 EMA, you win. Hopefully, we can say the same about this touch to get us to the finish line here. Yep. See the rejection. All right, y'all, we're going to get this $1,000. We just going to get this $1,000. Here it come. We are going to get this $1,000. I'm going to wait for this candle to close because, I mean, I want to hit the target. We are going to get this $1,000, y'all. This little green candle ain't scaring me. That EMA gonna hold. This is actually just making a second entry short. Count from the bottom. Push up, first entry, push up, second entry short coming to take us home. See, it can't even get up there. It can't even stay near the EMA. We are going lower. If you don't know, we are in the tightest of ranges right now. Right through here. I mean, this is the tightest of ranges. We survived again. Come on, push down. I don't know if we're gonna
order canceled.
There we go. That's how the cookie crumbles, y'all. That's how the cookie crumbles. So close. I probably had 3 chances to lock in that 1,000. Didn't work out this time. I also could have stayed back too. I didn't have to lock in that probably $400. I didn't have to lock it in. I could have stayed back at break even, which, you know, hey, we'll see. But the overall read was correct, because actually if I went here, you know, if I got in earlier, that would have been a decent win. All right, but that's how I played that one. Hey, we still made money, and we still made like $400 or $500 too. We still made more than, you know, the average person. So trading is awesome. ES futures is awesome. You just have to go with the flow and don't fight the market. Yep, I should stay back. That's okay. So I hope you guys enjoyed this one. So hey, stop fighting against the market. Learn how to flow with it, all right? And if you need some tips to pass that prop firm challenge, comment below, give me the guide, and I will send you Finally Funded, and I'm sure it will help increase your chances of passing that prop firm challenge the next time you take one, all right? So until next time, My name is JD, and as always, I wish you increase on the Sutton. Bye-bye.